Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, as we just heard in the U.S. Congress, they've managed to prevent a government shutdown with a short-term funding bill. The markets were down on Thursday, though, in a big way, and the futures are down, too. What's the story in the global markets?
Yes, if you look at the U.S. market, it continues to do quite a bit of decline, and it actually entered one of the worst September in the past. If you look at Dow Jones, it tumbled by more than 500 points on the last trading day of third quarter, and the S&P lost more than 1%, and NASDAQ declined by 0.4%. Clearly, the Wall Street is worried about the inflationary pressure because of the supply chain issues. And there's continuation of concern about the possibility of rate hike by the Fed if the tapering continues to be scheduled to happen in November, and at the overall uncertainty about the inflation pressure continues. On top of that, the concern about the debt ceiling issues are continuing. It hasn't really passed the long-term changes in regards to debt ceiling. It just approved the short-term appropriation bills that would keep the government running through December 3rd. So obviously this is just a short-term initiative rather than a long-term solution. So clearly that is making the investor to be quite concerned about. All in all, the higher rates and the dollar strength, all that is resulting into the global market to correct, including the U.S. market as well as the Asia market, even also Korean market.
And this volatility on Wall Street spilling over into Korea, the KOSPI almost back down to the 3,000-point level and the KOSDAQ down below 1,000. Again, retail investors seeing a chance to buy. Tell us about the domestic market.
Right. Clearly, today's movement is indicating that the Korean market gets affected by the global macro environment rather than the fundamentals. If you look at the South Korea manufacturing growth numbers, it continues to accelerate. The PMI manufacturing numbers came out, and it was at 52.4 in September, rising from 51.2%. If you look at the overall growth rate in terms of the export, it slowed down, but nevertheless, very strong numbers. And the job creation was fractional, but it's continued to be quite reasonably good. Domestic consumption numbers are, even despite these COVID-19 issues, it's reasonably good. And all in all, GDP growth rate, export, all seems to be quite reasonably good. But nevertheless, because of the currency movement, where the Korean won moved up to 1180 plus, and foreign investors continue to be a net seller today, not that much, but nevertheless, about 300 billion won worth of equities in KOSPI, and about 100 billion won of equities in KOSDAQ, and that resulted into a huge decline because institutions really did not support the market. Only, as you said, the local retail investors are the ones that buying the Korean market. Today, the market has fallen quite significantly, almost touching near 3,000 territories for KOSPI. KOSDAQ has gone down below 1,000 territories, so has been one of the worst day of trading days on the first day of October. If you look at the U.S. market, it tends to be quite weak in the month of September and October. People are concerned about the short-term corrections, but nevertheless, we think that the fundamental is reasonably good, and that if the corrections continues into the October before the earnings seasons, we think that that is an opportunity. Even though a lot of people are concerned about third quarter numbers are going to be weaker than expected, I don't think that will be the case. Earnings numbers should be quite reasonably good, and therefore this time around the earnings should be acting as a positive indicator rather than negative indicator.
And zooming out a little bit, oil prices still right near their peak. Factors pushing prices lower were offset by an expected rise in demand from China. Gold coming back up a bit today, though still quite a bit lower than its peak early in the pandemic. What do you see happening in these two commodities?
Right. In terms of these two commodities, that they're definitely moving differently based on what happens to the fundamentals and what happens to the macro pictures. Clearly, there is a concern about the supply chain in terms of the energy side. And because of the new energies, or so-called the renewable energy supply, seems to be bottlenecked in a sense that the wind power is not happening that quickly, and therefore demand for the oil or demand for the coal, it has risen quite significantly due to quite significant increase in the demand for energies due to the fourth industrial revolutions. So therefore, we have seen oil price rising to quite reasonably high number, but nevertheless, we think that the overall demand picture is not necessarily that strong. If you look at the rig count of U.S., where the shale gas are not producing as much oil as people that we've been seeing before. So we think that this is just the supply and demand issues rather than, say, so-called a very strong demand issues. So therefore, the oil price rising trend should not be a long-lasting picture, but rather we're trying to move into the carbon zero environment. And if that's the case, then the fossil fuel-related prices are not going to be here to stay, but rather stabilize from current level or maybe even fall in the longer-term pictures. But nevertheless, still, there's quite a bit of demand right now affecting the oil prices. As for the gold, as you know, when there's uncertainty in the financial market, it tends to show dollar strengthening as well as gold price rising. But if you look at the gold prices in the past several months, it really didn't do too much. So what that means is that the people are not too worried about the financial crisis. They're just worried about the short-term corrections. So therefore, gold are not really acting as a safe haven investment because we do think that the overall economic growth rate should be quite staying strong. And if you look at the last quarter of the GDP growth rate of U.S. showed a 6.7% growth rate quarter on quarter on annualized basis. That is higher than expected, and clearly the global economy is recovering.
And just briefly before we go, Mr. Yu, the exports in September were at a record high, growing by 16.7%. Talk to us about what's going on that front.
Right. I mean, as we said, exports are doing very well. Manufacturing numbers are very good. Korean fundamentals seems to be very strong, but nevertheless, the market is showing some corrections. I guess people are concerned about the economic slowdown into the fourth quarter this year and next year, with the COVID-19 issues stabilizing, and it's the number itself should be on a normal basis rather than low base effect. So I guess people are concerned about the growth rate itself going down, but we must say that the economic growth rate is there, and therefore Korean export numbers should continue to be quite reasonably good, and it's not going to be turning into any negative territories. So therefore, we shouldn't be too concerned about the export numbers slowing down. And so far, it has shown very strong number of 16.7% year-on-year growth rate in September.
Got it. All right, Mr. Yu, thanks for sharing your insights with us today, as always, and have a great weekend.
Thank you. You too.